The talk is that they're going to cap the exemption on tax-free income at a certain level. The one proposal is at 28%. So any income that comes in that's tax exempt will be capped at that level, and above that you'd have to pay taxes. Right now that's a proposal that's on the table. There's a lot of lobbying by state and local governments against it because it raises their cost of borrowing. But we don't know what's going to come out, but that's the current proposal. On the one hand, it makes munis a little less attractive because you aren't going to get the full benefit of the tax exemption if you have income above that level. On the other hand, if that happens, most likely we're going to see taxes on other things go up. The marginal income tax rates probably, taxes on dividends, on dividend-paying stocks, and probably capital gains tax. So that's an offsetting factor. Munis would still be about the only asset class where you get tax-exempt income. So I don't think it's going to have a bad effect on the muni market. There may be a little bit of initial reaction that's negative, but I don't think it would last very long when people realize it's still an asset class that's attractive for tax-exempt income. We're not too concerned about credit in the muni market. I mean, you do have to be careful when you're selecting muni bonds. It used to be really easy. When there was insurance for the muni bonds and everything was AAA rated, it really wasn't a question of picking out credits as much as it is now, where you have to be a bit more careful because the insurance isn't available. Having said that, most municipalities are dealing with the current situation really well. They're doing what they need to do. They're raising revenues as best they can, and they're cutting services and their costs as best they can to get in line. So most state and local governments are doing what they need to do. You just have to be really careful about where you're investing. Do a little bit more homework. Make sure you're in the good credits. Munis typically very, very low default rates. So the quality in some ways is similar to treasuries. It's not quite as risk-free as treasuries, but it's got a very low default rate. So people like the credit quality. And the yields have been, relative to treasuries, at that level or above. So, you know, even if you're not getting the tax exemption, it's an attractive alternative to treasuries.